Hi, welcome back. The market is a bit jittery, you'd have to say, A, because of the DHFL crisis, and B, because of the RBI policy that's coming up. So as we count down to the Reserve Bank's policy in just a few hours from now, let's hear out what veteran corporates and India Inc. have to say. Here's Uday Kotak with his expectations from the central bank today.
I think 25 basis rate cut reasonably baked in by markets, but it has to be combined with transmission. And for banks to transmit, they need their cost of deposits to come down. For the cost of deposits to come down, alternative instruments should be at reasonable parity.
Okay.
And this is where the issue is. Small savings even now pay over 8%. And a 20% of delta mobilization of fiscal deficit is coming from small savings at much higher rates than government securities rates.
Right.
So bring parity back and make sure that transmission of rates happens through better liquidity and lowering of deposit rates. I would like to see, obviously interest rates need to correct downwards. I would like to see liquidity continue to get better. And we need to also make things easier. If you look at the entire situation, there's a lot of preemption of high rates of interest paid on savings. For example, small savings rates by the government. They're much higher than the deposit rates of banks. Therefore, if banks have to get deposits, there has to be some parity in how the interest rate cycle works.
Okay, well, let's move on then. The market is seeking lower levels now, 50 points down on the Nifty and 176 down on the Nifty Bank. So it's clearly taking cognizance of this contagion risk, whatever it is. It's a trending lower market. Make no mistake about that. Ashwini Gujral, Mitesh Thakkar and Prakash Kaba now join us. Ashwini, has that long trade been nullified yet, or is this a time to actually add? How would you approach the index, and then will you take your stock calls?
Well, not a time to add because you want the market to turn around. But it's okay. I mean, 50 points in a contagion risk market is fine. And there are stocks which are on the other side also, like Hind Unilever and Titan. So, see, you'll have to take, this one trade risk, which will show you whether we are going towards a 400-point cut on the Bank Nifty or a 150-point cut on the Nifty. Right now, you just have to stay put and believe that maybe at some point, some sort of buying will come back. Having said that, we would like to buy HPCL with a stop at about 315. Target of 332. Titan is a buy with a stop of 1240, target of 1280. And HUL is a buy with a stop of 1815, target of 1860. Sometimes, once you have an early morning dip on financials because of some reason, a lot of shorts tend to get positioned on these policy days, and then it doesn't take much for the Bank Nifty to come back strongly if there are no major shocks in the policy.
Okay. Mitesh, morning again. What you trading?
Vatha, I think, I have one sell and one buy. We've not bought the index as I said. I think I was waiting for some 20-30 point bounce back to confirm that 12,000 will hold. As of now, I think it's slightly on the trickier side. So avoiding the index for the time being. But Aurobindo Pharma is a sell with a stop at 655. Look for target of 620. And a crude sensitive, though I think it's not really picked up as yet. But Berger Paints, I think the pattern is positive. So I expect if 323 holds, buy with a stop below that for targets of 338.
Okay, well, Escorts is one stock that's under quite a bit of pressure now. Remember, the management told us that the industry can even see a degrowth of 5% if the monsoons play truant. So that stock has actually moved to the low point. Prakash Gaba joins in now to track a couple of stocks for us. Prakash, what would your top ideas be?
I have two stocks, Sonia. Good morning to you. I think State Bank of India looks a bit weak because it's opened with a gap down and perhaps it's going down further. Target on the downside is 338. Stop about 350 should be okay. And looks like the India Bull housing also is looking weak. It looks like the Dewan housing effect here. Possible target on the downside is 720. Stop about 777.
Okay. Well, Sonia spoke about escorts. Also keep an eye on Mahindra and Mahindra. That's also now making lows of the day, because obviously this, and this is what we were referring to.
Difficult guidance.
Exactly, and this is what we were referring to one day after as well, especially on M&M and escorts. While that's one area where the visibility is the lowest right now, and with the monsoon situation also not clear, I think that's one area where you have clearly a lot of selling pressure, and both escorts and M&M in fact right now making lows of the day. So that space is seeing quite a bit of selling right now.
Okay, gentlemen, thank you very much for joining us, and I guess we will touch base with you repeatedly. It's now, actually DHFL was 14% down, now it's 11% down, but the others, India Bulls, Relcap, even L&T Finance, Edelweiss have all up, down more than 4%, so it's difficult.
So from a market standpoint, can the policy rate cut do anything to spur sentiment, or is it something the 25 basis points already priced in?
25 is priced in, but I'm absolutely at the moment leaving for RBI.
Yeah.
I think that they will stay accommodative, and I think even by cutting the growth rate and in various other statements in the policy itself, you are going to expect that they will, encourage, go to the market in some fashion. But whether an NBFC package comes today itself, a housing finance package, I don't know. I'm sure the Reserve Bank is prepared, but it will want to see the timing. If DHFL is going to find a buyer, they may not want to disturb the market forces. They will allow market to take their own course. After all, we are at all-time highs. It's not a crisis situation. But if it thinks that there is a crisis in a small subsector, they might. I don't know whether you should expect it at 12 o'clock when the governor speaks. It's quite possible it comes, Friday night, but I think there will be an indication clearly that we will do whatever it takes.
Okay, we will do whatever it takes is something that the government has said with respect to the agri sector as well. So we've been talking about various pockets. We spoke about tractors. Let's talk about sugar now. Balrampur Chini has had a sweet 2019 so far with a 60% gain for the stock. Vivek Saragi, the MD of the company, joins us to talk about that. Mr. Saragi, good morning. Always a pleasure speaking with you. Before I ask you about your own company, I wanted your thoughts on, or your expectations rather, from the government in this budget with respect to reforms both for the sugar industry, if any, and for the agriculture sector in general.
Morning, everyone. See, basically what gives us comfort is over the last 5 years, sugar has been in surplus, and the government, barring 1.5 years, and the government has dealt with the surplus, I would say, rather appreciably. So if you see last year, we had the highest stocks in our lives, highest production. They came up with this plan of Be Heavy, which gave us almost 31 rupees for sugar. Some sugar got diverted there. Secondly, they allowed or sort of mandated an MIQ, that's minimum export quota, and they paid us a loss for that. We at Balrampur, we've exported the entire quantity allotted to us. So another stock depleting measure, if I can say. UP government did not raise the cane price. Both the governments gave some soft loans to pay cane price. They central government also created buffer stock. So there was a huge problem, but I thought it got dealt on all fronts by both center and states. I remain hopeful that with continuity in government, continuity in policy is all we need.
Okay. Good morning, Mr. Saragi. Let me start with something more micro. We are given to understand that the UP State Electricity Board has come with a draft report which says that the price at which they are buying power from sugar companies should be cut. And according to the draft report, from 4.8 per unit, they want to cut it to 2.9. How serious is this in terms of tweaking your revenues?
See, this is serious. And we met the UP government, we tried to explain the positioning that if you're given loans and if you want the sector to do well, the revenue pot is a combination of sugar sale, power sale and alcohol sale, ethanol sale. You deplete the pot somewhere, the revenue goes down. So having said that, I think there will be a dip. I don't know to which extent. I personally don't feel it should be this large as has come out in the draft regulation. We will reserve our legal rights. Yes, if you're saying it's a challenge, short term, yes, it is.
I also wanted to ask you about the new minister, Ram Vilas Paswan. Do you think that he'll be sympathetic to the situation in terms of farmers and mills?
He's our old minister. As I said, we have got complete continuity. Mr. Ramvilas Paswan was our minister prior to the election for 3 to 4 years, and so is he now.
Okay. So in terms of earnings, just coming back to the numbers, FY19 has been a strong year for you. In fact, the sugar business turned positive at the EBIT level. What is the outlook like for the first half of FY20?
Okay, I forgot to mention the major policy initiative also was MSP, which was raised from 29 to 31, and the existence of this quota system where mills are allowed to do regulated sales. So this is again a positive. Having said that, the next year I look forward with a little more optimism on the stock front. There's the production consumption. It's early days, but monsoon is suspect. Maharashtra's water table last year was very good. So even if you had a little bit of a deficit monsoon, the reservoirs made it up. Reservoirs are completely dry. People are talking of a worst drought in the last 40-50 years. Honorable Chief Minister of Maharashtra, Shri Sharad Pawarji, who knows the area better than anyone. So yields and area is both to come down in Maharashtra. UP, it's too early to say, but the production which was at 325 or 325 lakh tons, it's slated to come down sharply in my mind, but early days.
So just coming back to that, State Electricity Board's draft report, if this is approved, what kind of impact would it have on your business itself? There is an expectation that it could be, your EBIT could turn negative if these changes come through. Can you give us a ballpark impact?
No, you're saying EBIT in the power segment? What are you talking about?
No, in the power segment.
No, I don't think that will happen, negative. But yeah, a lot of the profit of the power division gets shaved off. So just to give an example, if we sell about 60 odd crore units, so if it's 1 rupee, the impact is 60 crores. If it's 1.5, it's 90. That's the thing. But yes, having said that, the government, if it does this, has to correct somewhere the cane price or something else has to happen.
What is the opening inventory for the new sugar year?
Lata, we are at present, in the beginning of June, I just saw it, it's 77.5 lakh bags for us.
Okay.
Okay.
And that is, how does that
for
compare?
the industry, the more relevant, sorry.
No. What is it for the industry, and how does it
Sorry?
compare with last year's inventory?
Okay, so last year we began with an opening inventory of approximately 105 to 107 lakh tons. We would be ending with 140 lakh tons because the production is higher. The export expected to happen to about 32 to 35 lakh tons. And the production is so much higher, so it's expected to be 140 at the end of the year, vis-a-vis 107. So it's about 30% higher.
Okay, so your best guess for the gate prices for sugar would be what?
See, Lata, we have this MSP going, which is the minimum sale price.
Yes.
And at present, we are selling, because this is the minimum price for the country, UP gets a bit higher, so we are selling it around 33.5 right now.
Okay, 33.5.
That is the maintainable price, you think, or you think it's too early to tell? You'll have to look at MSP, harvest, etc. before you're able to make a forecast up until October.
See, if the policy continues, which I don't see any reason for not continuing, I don't think prices would dip below 32.5 for UP.
Okay.
And plus, there is a correction on the way of this excess production.
Okay, so 32.5 could be at least the base for the near term. Can you tell us about the molasses prices as well?
Yes.
How much have they gone up in the recent past, and is it possible to maintain, the distillery margins at current levels, given that raw material prices have gone up?
See, we consume all our molasses. So for us, it's a divisional transfer. The balance sheet is neutral to this transfer pricing. Having said that, molasses prices have moved up. It was like 30 rupees a quintal. It's about, or 200 rupees a ton. It's moved up to close to 4,000 rupees a ton.
Okay, so you're saying this move will not have any impact on your distillery margins at all?
No, I mean for Balrampur, in the entire balance sheet, it won't have any difference.
Okay, all right. Mr. Saragi, thank you for stopping by and speaking with us on a range of issues with respect to the industry as well as your own company. Well, that's the word coming in from Balrampur. Chini is still down about 4%. But the other stock that's under quite a bit of pressure this morning is GAIL. PNGRB has hiked the tariff for the Hazira Vijaypur Jagdishpur upgradation pipeline, or the HJP pipeline. In fact, what could the impact be? CLSA has downgraded the stock as well. Sonal is here to give us more details on all of that.
Well, Sonia, the upgrade has come in, but it is way lower than what the street was penciling in. Just putting the news into perspective, well, PNGRB has hiked the tariff for HVG and HVG upgradation pipeline, and the hike is around 3%. Why it is a disappointment is because GAIL had applied for a hike of more than 100%, and the street was estimating a hike of around 15 to 40%, and a 3% hike is way lower than what the street was estimating. And these are two important pipelines because they contribute around 60 to 65% of the total gas transmission volumes. Well, Motilal says that they had penciled in around 40% hike. CLSA said that they had penciled in around a 15% hike, which has not come through, and that is why they are disappointed. In fact, they say that this drives a 4 to 7% cut in estimates, and they have reduced the target price from 420 to 365. They have in fact downgraded the stock to an underperform from a buy. Not only the pipeline tariff hikes, there are other headwinds for the stock right now. There is LNG price that is declining, the crude prices, they are declining. So overall, a lot of headwinds for the stock, and that's why they do not see any upgrades coming in for the stock going forward.
Okay, well, thanks a lot for that. GAIL is the biggest loser at the moment, but the other big loser is DHFL. The stock is down over 10%. Remember, the company has missed the deadline to pay the NCD holders 1,150 crores. Here's a word coming in from KK Mistry, the Vice Chairman and CEO of HDFC, on the deepening crisis and whether it's just going to be a sentiment impact or a long-term contagion impact on the sector.
I think there might be a knee-jerk reaction in the market. But I don't think it will be as severe as the ILFS one was, because ILFS came as a surprise. DHFL people have been talking about for a fairly long period of time, and therefore I think it's pretty much factored in. So there might be a knee-jerk thing for a day or two, but I don't think it will be systemic or create a long-term problem. That's my view.
All right, so it was well known, unlike the ILFS crisis. That's the word coming in from KK Mistry. But let's move on and get a quick update of what's happening in the commodity space this morning. Manisha Gupta, commodities editor, is here with us. Manisha, crude has been on the downtrend for a while.
Oh, well, yes, pretty nice for the other asset classes, yes, but not so for the bulls there in case of crude. We have seen the crude prices get into bear territory, and that is where it is. Even as it's tad bit up in the international markets, the Indian prices continue to be under pressure. It is about the inventory numbers that came in from US yesterday, which show a further increase in the US trees, and now they stand at a 2-year highs, nearly 6% up from a 5-year average. If you look at the US production, that also is at yet another record highs of 12.4 million barrels per day, and is down 20% from the 2019. So 18% off from its 20. About continuing, and the global data that does not support, because whether it has been about the US numbers, the China economic trade data, all of that has been on the weaker side. And also the IMF numbers that came in yesterday show that 6.2% of a growth is what China would see in this year, but that is downgraded yet to 6% now for 2020. Also, when you look at the global factory activity numbers, that tells you that they have contracted for the first time since 2012. So almost everything is trading slightly weaker when it comes to the industrial commodities there. So while crude prices are trading under pressure, it is the gold and silver prices which actually have had it good for last fortnight or so, continue to be on the positive side. We have seen 0.25% of gains continue for the global markets as well. The weakness in US dollar, the mixed Asian equity markets, expectation that the US Fed will cut interest rates in the second half of 2019, all of that has been supportive. So we are trading at a 3-month highs for the gold prices in the global markets. 32,700 is back in gold in case of India as well, almost nudging 37,000 for silver prices. So as I said, the last couple of weeks have been quite positive for the precious metal prices. Can't say the same about the industrial commodities. where we have seen pressure continue in case of Shanghai. LME prices have seen some bargain buying, and that is the impact that you are seeing for the Indian markets. Most importantly, it is going to be about the ECB meeting today, where Mario Draghi is expected to continue to provide stimulus going forward, and that could be a bit of a positive for the metal prices. But then the US and Mexico trade talks are scheduled for today, and that could be a bit of a positive. The US and China trade talks is something that are yet to be rescheduled, so that is a bit of an uncertain. Various fundamentals that the metal prices are watching out for. So last couple of days weren't so good, but a bit of a bargain buying on your screens on all of those metals as well. Trading strategies, and we have them from Angel. It's a buy in case of crude and zinc. For zinc, they're looking at targets of 205 on the higher side. For crude as well, a buy on dips with targets of around 3680 on the higher side for the day today.
Okay, thanks
All
a
right,
lot.
Sensex down 100 points, Nifty down close to around 45 points. But let's move on to our first management then that we have at 10 a.m. today. Max Financial reported a rather healthy set of numbers in the fourth quarter. Their Axis Bank bancassurance arrangement is likely to continue, though a deal is unlikely in the near future. We have Mr. Vishwanand, the Deputy Managing Director of Max Life Insurance, who joins us on the show. Thanks so much for joining in, Mr. Vishwanand. Well, let's talk about your value of new business then. What kind of, an expectation do you have in terms of growth for the coming year? And also in terms of margins, does it get better than the 21% odd?
Well, clearly last year, Max Life has been an outperformer with 21% growth against a backdrop of the private sector growing at close to 12% and the overall sector growing at 9%. These numbers, even at 9% for the overall sector, is healthy given the fact that it is on a base of rather healthy growths of last 2 consecutive years in both FY18 as well as FY17 of 20% plus. Even in those years, Max Life has outperformed the industry growth overall. So essentially, we're looking at a strategy of 25, 25, 25, which is over the next 3 years. We hope to see our value of new business growth to be 25. We hope to see our margins in the same range, and consequently, our return or embedded value to be 25. As of last year, we exited with close to 30% on VNB growth and margins of close to 22% and return on embedded value of close to 22%. So that's our current trajectory. The previous year in FY18, we were at 20 odd company.
Mm-hmm. Okay. Mr. Vishwanand, good morning. So that's an easy way for our investors or our viewers to remember, I guess, 25, 25, 25. But I think what they're also interested in is what's happening with the Axis Bank deal. Is the deal happening at all? Because, it's still the only large bank without an insurance arm. But we now understand that they've ruled out their insurance foray because of the RBI norms. What's the status as of now?
Well, before that, I'd just like to put this in context that Max Life has achieved around 30% of our new business coming in from what we call our proprietary channels, which includes our agency, our customer advisory team or an employee sales force, and our leadership in the e-commerce online space for providing protection. So this is about 30%, while 60% is from our bank partners, a large chunk of it coming in from Axis Bank. We hope that in future, as we continue our growth, which is evidenced even in last year, our growth in proprietary channels has actually outperformed our partnership channels. Our growth in proprietary channels was 29% last year, while our growth in partnerships was 18%, aggregating to about 21% overall growth for the company. Having said that, our relationship and our endeavor with our bank partners, such as Axis, is to deepen and strengthen them in the years to come. So that's really our endeavor as we go along in building our bancassurance business and strengthening those relationships as well.
But there's no deal happening with Axis?
As I shared with you, the endeavor is we have an ongoing agreement and an arrangement which is running into next year as well. And we are in the concurrency of that particular agreement. Of course, discussions could be happening at various levels, but there could be market speculation as well, especially because we have close to about a year and a half to go before the expiry of the current agreement.
Okay. So this new business growth of 25% that you're targeting over the next 3 years, where will this improvement really come in from? I mean, are you looking at, a higher proprietary channel business, higher share of protection? Can you just give us more color on that?
Sure. Actually, what we would be doing is growing all our channels, but outgrowing on our proprietary channels. Last year, we opened something like 86 new office units in our agency model. And this year, we would be adding a similar number, close to 76 office units within our agency channel. This will ensure that our 70-30 ratio of partnerships and proprietorship tends more closer towards 60-40 in the years to come, while the whole top line is growing as well. At the same time, we also noticed that last year, thanks to our focus on protection and our leadership in the online protection space as far as pure term policies are concerned, we achieved 1 out of 4 policies to be pure term. This year, we're already close to 1 in 3. So that would be our focus, to increase it. And in terms of premiums, last year it was close to 6% of our total top line came in from pure protection plans, which, as you would know, is high on margins as well. Similarly, this number of 6% is expected to increase to 8 and 10 in the next 3 years to come.
All right, we're getting the drift in terms of business and your targets as well for the next couple of years. But just looking at the shareholding pattern on the exchanges, the promoter pledge is rather high. So the promoter holding is at around 28% odd. Out of that, more than 80% is pledged. And that's something that the market doesn't like very, very much. Is there any communication from the promoters that they're looking to release this pledge out there, or is there a game plan in place? Because I was looking at it through the past few quarters, and that pledge amount is just increasing.
Well, yes, our promoters are aware of that, and there is a game plan in place. It would be shared in due course, and that would only bring positive news for all investors.
So in the coming year, we can assume that this promoter pledge, the percentage will at least come down from these current levels of 80% plus?
Well, I'm not sure about the exact timings, but I can assure you that this is a hot item, and there is enough action happening on this count, but I'm not able to confirm whether this would happen in the specific time frame that you suggested.
Okay, so you said that the ongoing agreement with Axis runs till next year. I understand that the relationship ends in 2021. What's the plan henceforth, post 2021? Would you be extending that relationship with Axis Bank?
We entered into a tie-up with Axis Bank in the month of May 2010. This year, we will be entering into our 10th anniversary of the partnership. Along these periods, we've had many discussions and renewals of the contracts, as you might expect. So one would see such a view going forward as well. Agreements always have a time-bound period. That's when both parties sit together and look at future business plans. The good news has been that the plans have only been going up and up and up, as both the organizations have been growing well, and the market is actually very significantly absorbing this growth.
Okay, well, we will look forward to hearing from you soon. Thanks so much for joining us and giving us an update. So that's the word coming in from Max Financial. Let's take a short break. After 2 successive rate cuts in February and April, should we expect one more? With growth hitting its lowest level in 5 years, the chorus for a rate cut is definitely getting louder. Majority of market participants polled by CNBC-TV18 expect a rate cut, but will it be 25, 35 or 50? Ritu Singh is here with the highlights of the key findings.
The Monetary Policy Committee of the RBI is expected to cut repo rates for the 3rd time in a row, bringing it to 5.75% according to our poll. Now, while on one hand, low growth and soft inflation will build the case for a rate cut, uncertainty about oil prices, weak El Nino conditions, slow transmission of rate cuts by banks could hold the RBI's hand. But of course, the majority seems to think that the case for a rate cut is stronger. Therefore, 70% of the respondents to our poll expect the repo rate to be cut by 0.25% in this policy. 10% are even expecting a 35 basis point rate cut from the governor. For the full financial year FY20, majority of the respondents expect a 50 basis point cut. Some even expect up to 100 basis points cut. Now, on the macro picture, 70% of our respondents again expect RBI to lower the GDP growth forecast for FY20, and accordingly 70% of our respondents also expect the GDP growth forecast for the first half of FY20 to be lowered in tandem. However, for the second half of this year, GDP forecast of 7.3 to 7.4% growth may be left unchanged. Do remember, the growth had slowed down to 5-year low in the Jan-March quarter of 2019, and that may well be one of the factors that pushed the MPC to go for a rate cut. The other big factor, of course, will be inflation, and the majority of our respondents expect the CPI forecast for the first half of FY20 to be left unchanged. As for the second half of FY20, half of the respondents expect that 3.5 to 3.8% CPI projection to also be left unchanged. Do remember, CPI edged up in April to 2.92%, but it continues to remain well below RBI's comfort zone of 4%. Another factor that could again support a rate cut by the MPC. However, the economists polled by CNBC-TV18 do not expect RBI to change its stance from neutral to accommodative just yet. And lastly, the statement of the policy itself, that is expected to be far more dovish compared to the previous policy.
Okay, all right, Ritu, thanks so much for that. Well, we have with us a couple of bankers then to discuss what are their expectations from the Reserve Bank of India. We have Mr. Mohapatra, the MD and CEO of Bank of India, as well as Mr. Rao, the MD and CEO of Allahabad Bank, who join us on, on the phone line and in the studio as we speak. Thanks so much, gentlemen, for joining in now. Mr. Mohapatra, coming across to you first, before we discuss the expectations in terms of what you're looking at from the Reserve Bank of India, wanted to quiz you in terms of exposure to the DHFL group on the whole. We understand that close to around 50,000 crores of their book is funded by banks. Does Bank of India have an exposure either in terms of bonds or any kind of funding?
We don't have any exposure to bonds, but we have exposure to their assets, but no exposure to bonds.
So what can you quantify the amount, sir? Is it approximately 3,000-4,000 crores odd? Because the banking space is accounting for 50,000 crores odd of their exposure. So 4,000 crores is the exposure. Can you confirm that?
Yeah, that is in the public domain. We have that exposure, but as on today, they are addressing the issue and are quite hopeful that it will be addressed positively.
So what is the exact exposure? I mean, as my colleague was saying, is it about 3,000-4,000 crores or more than that?
Yeah.
Okay.
No. Around that.
Around 3,000-4,000 crores. So what are you hearing as far as the resolution is concerned? And do you expect a lot of these loans, to be stressed? I mean, are we looking at further NPAs as we head into the next few quarters?
No, we are waiting for the final report. But as per the information available to us, that they are arranging to, because that 7 days grace period is there, and they are arranging to pay that interest amount within that grace period. And rest of the amount also they have arranged through different means to raise the resources. And we are quite hopeful that it will be addressed positively. We are watching very closely the developments.
Okay, so you're quite confident that this amount will be honored, right, by the DHFL group? Any indications have come from them?
Whatever information they have given, whatever information they have given to us, that interest portion, whatever default has happened, but they have 7 days grace period, and they are quite sure that it will be arranged within that period. And then rest of the things they are arranging, to raise resources from different ways. And as per the information available to us, we are quite sure that they will be addressing the issue positively.
Okay, Mr. Rao, good morning. What about you? Does Allahabad Bank have any exposure to the DHFL group?
Madam, with respect to Allahabad Bank, while we don't have exposure to the bonds, we have exposure to the credit, but it is a very small level at 120 crores. And we are not expecting any impact on that. We'll wait and see how they're going to take out the resolution mechanism. However, it's not going to impact our balance sheet.
Okay, all right. Then let's focus on the big event today. That's the Reserve Bank of India policy. So, Mr. Rao, coming across to you first. What are your expectations? Are you baking in a 25 basis point cut, maybe a 50 basis point cut, or are you expecting even some tinkering in terms of maybe a CRR cut?
No, we are not expecting CRR cut. While 25 basis points rate cut is expected across the industry, we also go by that the same. If there was an opportunity for RBI to tweak between the 25, that means if they want to break away from the tradition, we were thinking probably 35 basis points would properly indicate the rate cut required. However, we are not expecting that kind of a tweaking by the MPC at this point of time, since it would be for the first time. So on the lines of the industry expectation, as a banker, we also expect 25 basis points cut with a neutral stance with a more dovish approach.
Okay. The more important question, Mr. Mohapatra, to you as well, is whether this will get transmitted, because the 50 basis points rate cut up until now has not gotten transmitted to the system. So whether it's 25 or 35 basis points, will you guys pass it on, Mr. Mohapatra?
If you notice, it's always this question of transmission comes to the discussion. If you notice, 3-4 years before, home loan rate was 10.5% around. Today, home loan is 8.5, 8.6 rate. So you have seen the transmission happening in the industry. It's not that transmission is not happening, but apart from this RBI rate cut, there are other factors which which are responsible for deciding in favor of rate cut. But always bankers respond to the market, and they go for market-oriented approach. So why don't you think that bank will not be responding? Of course, if you see. Recent times only, last 1 year may not be, it is not adequately, transmitted. But if you see the other macroeconomic factors like deposit growing 10%, advances growing 13%, and other issues, so it is a very market-driven approach, and I am quite sure that all industry and everybody, all stakeholders, they enjoy the transmissions over the period of time.
Okay, so you're assuring all our viewers at least that if there is a rate cut, their loans will get a little bit cheaper, as you're saying that you've done it in the past, and you're looking to transmit that to your all your borrowers as well. Do you expect any sort of a package coming in for the NBFCs or housing finance companies as well in this RBI policy?
Everybody is concerned about. If you see when they started this NBFC challenge last September, October, since that time all the government, regulator, bankers, everybody, promoters, everybody trying to address. And this NBFC, any industry, they get into cycle every 5-6 years, and they address the issue also. And this issue when it started last October, September, everybody was very much concerned, but then they have managed till date. And RBI also supported through different ways, and government also supported, bankers also supported. And I'm quite sure if the situation demands, then everybody will come to the rescue. And economy is more important. India is more important than anybody else. So everybody will be playing their role. So I'm quite sure that it will be taken care.
Sure. Mr. Rao, if you had to, specifically tell us about the ABC things that you would expect from the RBI to address the NBFC and the housing finance crisis, what would your wish list look like?
Yeah, Madam, there are 2-3 important factors. From RBI perspective, RBI can only look at creating enough liquidity in the market so that whenever there is a requirement of rollover to be done by the banks for the NBFCs, it can be undertaken. But the more important point is, the asset liability mismatch available with the NBFCs, they'll have to address that in an expeditious manner. If only rollout is a solution, I am afraid the solution in a logical end will not take place. So NBFCs themselves, particularly those where they have lent to real estate in anticipation of liquidation of the excess inventory available with them, all these factors also need to be taken to the logical end. So the available resources at RBI to take care of NBFC crisis are limited to the extent that the liquidity is created in the market and the rollovers take place with the bank, so that they've got time frame to tie over their financial problems. But the tie-overing of financial problems should be taken on priority in terms of their asset liability mismatch. That is as far as the NBFC position is concerned. With respect to the economy expectation from RBI, other than the repo rate cut, we see that there is a stress in MSME segment, there is a stress in agriculture segment as well. And we also see in unemployment, all GDP growth has gone down, though the World Bank still declared that GDP for FY20 could be around 7.5. There are quite a few issues which probably may not be addressed by RBI directly, but then government also has to come into picture. But with respect to the policy perspective, repo rate reduction will be the, I expect the least thing to happen, which should trigger many more things to come from the government in order to take care of the stress currently seen in the economy.
Okay, Mr. Rao, Mr. Mohapatra, thank you for stopping by and giving us your expectations. So that's the expectation that bankers have. They will be passing on the rate cut if it comes through. And on the NBFC crisis, they expect a lot of immediate measures like the ALM mismatch that should be addressed and some liquidity measures as well. Let's see what comes through. But moving on, before we end the show, SL Infra, which has been making efforts to sell assets to raise funds for debt reduction, may soon announce one of the first deals, much to the relief of Zee Entertainment investors. Nisha is here with us to give us more details on that. Nisha, hi, what are you picking up?
Good morning, Sonia. Yes, this will be the much needed relief and respite coming in for the Zee Entertainment investors. While SL Infra, the group, the promoters have really been coming out with conciliatory statements on how they are looking at selling various assets in SL Infra for monetizing the company in order to reduce its over 11,000 crore rupees of debt. But no such announcement has really made it to the exchanges so far. So the first one in that lot could be announced very soon is what we gather from sources with direct knowledge. Of course, the deal talks have been on. SL Infra was in talks with Edelweiss to sell 2 of its transmission projects, and that we gather from sources with direct knowledge, the reliable ones, that transaction could be complete, and it's the valuation of 2,000 crore rupees, and that's the kind of fund that SL Infra could be raising very soon by the sale of these assets. This will be a very, very important move. Remember, they have been trying to sell a lot of assets. Their solar assets have also been looked at by various investors. No such deal has been consummated there. As far as the road assets are concerned, 2 of such assets are being looked at by CDPQ, a Canadian pension fund as well. So all those deal talks have been going on, but the key to all this is going to be a final announcement. That's what we are gathering from sources with direct knowledge.
Okay, all right. Thanks so much for that, Nisha. Well, on that note, we'll wrap up on Bazaar, but lots of trading ideas lined up on Chartbusters. Stay with us.